This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 1/20/23, show number 456. Well, Nick, the January effect continues.
Yes, it does. This was an options expiration. Well, today is options expiration for January as well, but we are seeing the January effect play out. This was, even though this was a holiday shortened trading week with Martin Luther King Day being on Monday, this week has been filled with a ton of whipsaw. I mean, we saw some really, really big market declines on Wednesday and a pretty decent fall yesterday. But overall, markets are picking right back up and they're getting a big, big rally today. So they firmed up. They look strong today to close out the week. We'll see what we get out here next week. I would stay somewhat nimble, but so far, the January effect continues.
Okay, January effect, but we got this earnings season is upon us. It's amazing. Every quarter they come around.
Yes, every quarter we get earnings season, just about every 90 days. And today we had Netflix report earnings, well, last night I should say, and that stock is acting very, very well. It's up 24 points today. That's about a 7.5% jump. So that may have boosted tech a little bit. As most of the NASDAQ stocks are leading the charge here. We do have the NASDAQ composite up around 2.5% today. Google's also having a solid day, despite announcing layoffs to the tune of around 11,000. So far, the tech sector has announced about 60,000 layoffs in the last 2 weeks. So we'll see if that has any effect on the markets going down, coming down the pipeline. I'm watching it closely, and I suspect it will, but as for today, the market don't seem to care, and the market's praising the layoffs.
Well, what's amazing about it? The 60,000 people have been laid off. What were they doing, and how come nobody's missing them?
That's a good question. Well, we know that Twitter has laid off quite a few people, and that's not even counted in this number.
And that's gotten better,
this is
right? And Twitter has gotten better since they got rid of them all.
Twitter has improved. So maybe Google and Microsoft and Amazon, the other companies that are laying off, maybe they'll improve. So, but you got a great point there, Kerry. I can't argue with that one. I know you're an attorney, but I can't argue that one.
Well, it's just funny because Twitter, actually, their performance is better. They got more users than ever before, record users. I don't know that they're making any money. I don't know that they ever would, but that's a different issue there. It's just interesting. So what do you think earnings season is going to tell us here? They're not, some of these companies are definitely beaten up, but not all of them.
No, not all of them. In fact, the thing about earnings season, I don't think the earnings season is going to be particularly good. Markets have been kind of forecasting that the earnings season will be bad. What the earnings have to do, though, or the companies have to do, is they have to surprise the weak expectations. That's how it works. So the market's always looking forward, and if they can surprise the weak expectations, then the stock will go up. Hence, you got Netflix. I don't think there was anything great about that earnings report, but the stock's up 7%. The thing I would warn everybody about, earnings season is very, very volatile. You're going to get sharp moves. Some stocks are going to get absolutely clobbered. Other stocks will react pretty well. And, if you're going to hold stocks into those earnings announcements, just be prepared. The moves can be really, really big in both directions.
I'm curious to see, a couple of months back, last earnings seasons, one before, slight misses were really devastatingly penalized by the market. That stocks were just destroyed, right? Remember,
they were.
Yeah, the tech sector, especially.
There were so many. There were so many. Yeah.
Yeah, they were really
and that could happen.
brutalized.
Yeah, that could happen again. The only thing now, though, Kerry, since this bear market has matured, is that the expectations have been so they're really, the bar has been set really, really low. So it's not that difficult for some of these companies to come out with a little bit better than expectations. And, if they can guide a little higher, usually that'll give them a bump. But I think you got to be really careful this earnings season, no matter what. There are going to be some stocks that just get absolutely taken to the woodshed. And there are other stocks that are going to shine with big up moves. So, again, be a little bit careful. Either way, there's a little bit more left to this rally. And then I think, it doesn't last all that much longer. But enjoy it while it's here. And, January effect is in play.
Well, the old saying, so goes January, so goes the year. We'll see if that one applies here or not. Gold has still been holding its own, but it looks like it's getting a bit toppy, doesn't it?
Yeah, gold has had such an amazing run. Today, it's kind of on the flattish side. I think that they're way overbought. They're way extended. Another thing I'd like to point out about the precious metals, which longer term I love, as you know, but in the short run, we're seeing so many buy recommendations now. I wonder where the buy recommendations were in September, were in late August. Now everybody's pointing out that you should be in precious metals. So again, I think precious metals are due to correct here. I would not chase them higher at this stage of the game.
All right. And we should talk about the good old dollar, because that looks like it put in its low. Looks like very possibly could be going higher from here.
Yeah, I actually like the dollar right now. I do think, you could get maybe a little bit more weakness potentially, but this is where I like equities that have pulled back. This is kind of the range where I've been looking at the dollar. So, we might see a little bit more downticking in the dollar in the short run, but ultimately the dollar is poised for a rebound now.
All right. And nothing to talk about in the crypto space other than Genesis, which is the Winklevoss's twins entity, trading clearinghouse, whatever you call it, exchange. I don't like that name because it's really not an exchange, but that filed for bankruptcy this morning.
Yeah, I saw that today. That news came out this morning, but ironically, crypto has been rallying. So it looks like somebody found some money under Sam Bankman-Fried's pillow. And ever since that liquidity injection there, I think they found $5 billion. The cryptos have all been rallying, especially Bitcoin, which is now around 21,800. Even with this bounce, nothing has changed. When we get the next liquidity crunch, the cryptos will fall. And, ultimately, Bitcoin, in my opinion, is going down to 11,000. But for now, the markets are rallying and crypto is rallying with it.
Yeah, that's interesting. 22,000 just about on the upside, and but the ultimate for now it's showing strength, but ultimately it's headed lower.
Yeah, it's headed lower, and again, as we've talked about on this program for years and years now, is that the markets move on liquidity, and January we got some good liquidity in the system. You had some better data as far as inflation goes, even though inflation is still here. Everybody is celebrating it like we're deflating, and that's not really the story. But for now, markets are moving up, and this is why I use charts, Kerry, because I'm never smart enough to figure out that stuff, and the patterns tell me what to do, and thank goodness I've been on the right side of this trade.
All right, so speaking of charts and patterns, here's one from Only Darshan. I wonder if Nick bought all the nat gas in the world after it went below $5. Strangely, he had not been talking about nat gas in a while, or rather, Kerry didn't ask him about nat gas, I should say, until today. This is our last interview. I'd been away for the past week. Nat gas, has it put in a bottom, and when does it become a buying opportunity?
Yeah, nat gas is not a buying opportunity yet. I have nibbled into some call options on UNG down here at these lows, but my nat gas buy level is just a little bit lower from where we are now. I don't really want to give the level away because I promised my members that we are going to take that trade. But I've left nat gas alone because the chart started to break down. And you know me, Kerry, I watch those chart patterns, and when they make certain formations, they're telling me they're going to go a little bit lower. So nat gas, in my opinion, still has a little bit lower to go, but we're getting close to a buy signal. And I will be getting into that trade shortly. And again, if he wants to know my exact entries, he should just come over and join the Bullseye program at In the Money Stocks.
All right. So I don't even have to say it then. Hey, here's another one. How would Nick explain the strength of the Dow and the German DAX? Is it just the money rotating from speculative tech NASDAQ into more dividend defensive stocks? Does he see the Dow testing its lows? Should the NASDAQ/Russell make new lows? Thanks as always.
Yeah, the German DAX is getting toppy now. But as for the Dow, the Dow's had a great run too. You got above 34,000. Right now, it's sitting at around 33,300. It's probably a little weaker today just because Goldman Sachs is getting hit. Looks like they're getting a federal probe. So that stock is down about 2%. That's probably weighing on the Dow. Dow got hit pretty hard this week on the back of United Health. Remember, the Dow is an index that is price cap weighted, unlike the S&P 500 and the NASDAQ, which are market cap weighted. So the higher the price of a stock, the more it affects the Dow. But we'll keep an eye on the Dow. I don't think the Dow has all that much upside, even if it does pop from here. I told my members 34,500 was a pretty good resistance level, and that still is the case at this stage of the game. If the charts change, I'll have to change with it, but I still think that's the big resistance point right now.
All right, so 34.5 on the Dow is resistance. We're going to hold you to that one.
Okay.
In any event, happy Friday. Look, go over to inthemoneystocks.com, join the Bullseye trading system. You'll be able to pick out these highs and lows as well, these entry points. Nick's been doing it for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails are welcome, kl@kerrylutz.com, and post your questions to YouTube, to the channel there. As you see, we will answer. And Nick, have a great weekend.
Thank you, Kerry. Have a great weekend.